Interest rates and housing. Oh boy, what a day Friday was. If anybody was paying attention to the news, did you see how everybody freaked out about the Biden administration, what they did? So they thought they were going out to announce something really interesting and really good. And instead, it completely backfired on them.
Oh boy.
But why are they trying to do it? Number one, the Biden administration is not paying attention to the truth in the housing market. And they were trying to do something to help people, lower income people, buy a house more easy. Well, first, there has to be a house to buy. And let me explain what's about to happen. So there has to be a house to buy. The supply is low. Now let's look why. Right now, interest rates are high. And with interest rates being higher than they were, you have people are not willing to put their house on the market. Even if you're going to downsize, if you're selling this house with a 2.5%, 3% mortgage, now you're going to go to a 6%, maybe 6.5% mortgage right now. And what are the mortgage rates right now? You can look that up real quick. I think we were 6.375 for a 30-year fix for people with good credit right about now. So if you've got one of those mortgage opportunities in front of you, here it is, hang on, 300,000, actually 30-year fixed is ticked up. I'm showing 700 credit. Move that up to 750, up one level, 740, yeah. Okay, just 697, so it's actually up a little bit. Right now, interest rates on a mortgage on a 30-year fix with 20% down is 7%. And I'm looking at this, are they able to see this right now?
They can. We can put it up on the
Okay, you can
screen.
see what's on the screen right now. If you're driving in your car, we are looking at the average rates that are pulled through the industry by Google. We're looking at a 20% down payment on a 30-year fix for a good consumer with 740 credit. It's 7%, 6.97. So why do I want to sell, me and the bizdoc babe, why would we want to sell a house with a 3.5% mortgage and go get one with a 7% mortgage? Why would we do that? So we don't put it out. That's a supply problem. Now let's go back and get ready for the other chart. So what's happening is there is a supply problem here in America, and the home prices remain elevated because we pumped a bunch of dollars into the system, a couple of $1 trillion that got pumped into it, and the value of the assets jumped up, and the supply went down, and the supply going down is going to cause the price to go up anyway. Low supply, prices go up. We were just talking about gasoline. When there's a gas shortage, what does it say at the corner? The Shell station says $5.25 for 89, and it goes all the way up to $6 for 93. And I'm talking about the gasoline octane levels. 89, 87, 89, 93 usually in the United States, or 91. But anyway, that's what you see. Supply is down, price is up. The same thing happened to homes, along with all that money we printed, also caused it to go up. So what you have right now is the Biden administration going out and created all this furor. Let me get back to that in a second. But against what backdrop? What was already going on is the interest rates aren't going down, and it looks like the Federal Reserve is going to raise rates a 1/4 point in about 3 weeks, in the month of May, when they have the next Fed meeting. So that means that there's going to be another 1/4 point, most people think, put onto the federal interest rate, and that from there they may flatten it out. Well, flat is good news. It just means it doesn't go up anymore. That doesn't mean mortgages are going back down to 4.25 or 4.5 or 5 anytime soon. As a matter of fact, it means, and by the way, if you're watching PBD podcast, I like to say, Jerome Powell is heading upstairs to see the cheerleader one last time for a 1/4 point. The cheerleader is our economy. Jerome Powell raising rates is pounding the economy. So he's about to head upstairs and pound the cheerleader for another 1/4 point. But hopefully, the poor cheerleader is going to get the summer off, and the rates are going to be allowed to stay flat and stabilize. And then if other economic factors are there, start dropping them down toward the September, October timeframe. But they're not going to drop like a rock. Probably going to be maybe a 1/4 comes down, and then maybe another 1/4 comes down. So I don't think we're going to see rates getting back really low till second 1/4 of next year, or about a year from now. So what's going on? Now you can see that's why the house's prices remain elevated. We don't want to put our house on the market because why do I want to sell it, even if I could make money on it, and then turn around and go get a 7% mortgage on a new house, even if I pay less for that house? And by the way, good luck finding a house that would be less. So there's the problem. So there you go. Home prices, and the chart is showing how the home prices are up, but the supply is down. That is more of the problem than mortgage insurance, what the Biden administration was trying to do. The problem is people are not putting houses on the market, and new building of homes is not happening as fast as it was in the past, because when those homes are built, they're at a higher price and they have a higher price mortgage. So it's tough for people with lower incomes to get into starter homes. So everything in the real estate industry is kind of shaky and kind of frozen a little bit. That's what's going on. So along comes the Biden administration. So I think now we can see home prices are not going to come down until interest rates comes down and supply comes up. So now what have we got? You know, it's really difficult to buy a house right now. You know, the supply that we're talking about, you know what the actual statistics in it? It's the lowest since 1999. 1999. And that's keeping prices high. The median price for a home in March, I think it was, I'm pretty sure it was like $375, median US price, $375. And that was only a slight dip from like $381 a year prior. So guess what? Those expensive home prices are staying there and no new ones are coming on. And so they believe that the inventory crunch is going to continue through the fall and not really alleviate. As a matter of fact, one of the senior writers at Bloomberg that's covered real estate, and he usually has a pretty good, you know, grasp on things. He doesn't see an alleviation in supply till the middle of 2024, 1 year from now, a little more than 1 year. So homebuyers don't want to move. Builders can't get things built and are finishing homes under construction faster than they're starting new ones. So they're finishing these faster than they're starting new ones, which means the supply is coming down. We're in a supply crunch. We're in a supply crunch made worse by the fact that interest rates are high. No one's going to put their home on the market to go get something else with a high rate. Meanwhile, the Biden administration jumps in to say, us to the rescue. So to say all this, it doesn't mean nothing is happening in the home market. There are some markets where prices are starting to drop. San Diego, San Jose, Tucson, a little outside of Phoenix, to name a few markets. It's not going back crazy and heating up, but there is some improvement in those markets, so there's some transactions are happening. So the market is bad, but it's not frozen. There are some pockets where there are transactions. Now, the number of transactions that we've seen is down 65% year over year. So for every 100 transactions happening a little over a year ago, now there's 30 to 35. So there is, right? So there is a pulse, but it's really faint. So here comes the Biden. So you may have seen the what went on. It was kind of crazy. So the Biden administration announces that they have a thing, and there's Federal Housing Finance Agency, the FHFA. They are responsible for, you know, programs that the federal government puts together that helps people get loans. There's FHA loans and a variety of things like that. And what they've said is they are going to, normally the new home buyers with average credit, they have to pay a thing called mortgage insurance. And they are going to reduce the cost of their mortgage insurance on maybe a $400,000 house by about $60 a month or about $800 for a year. Everybody said, okay, that's interesting. But then they said they were doing it based on FICO credit scores. And that's the credit score that runs from 550 for really average to 801 or whatever it is for just about perfect. And they're saying, well, if you've got a credit score that is somewhat low, then we're going to allow you to save this $800 a year on the mortgage insurance. Now that's $60 a month. It could be meaningful to people. But they added that, but we're going to, things are going to raise a little bit for the folks that have good credit. And that's where we saw this whole brouhaha just explode. They're going to compensate for the reduction in borrowing for lower income people that are trying to get into a house by raising it for borrowers with higher credit scores. Newsweek put this out in more stark terms, and they said, well, the people with the higher credit scores tend to be white. And I'm going to show you where Newsweek got that wrong. They tried to make this, well, blacks and Hispanics will have this, whites with the higher scores will have this. So I'm going to go into say why making this a racial discussion, how wrong that was, because it wasn't just Newsweek, that was floating around, and the media was kind of playing the race card a little bit with this as well. What it really comes down to is, I don't care what color you are, the government's going to give a discount to people with lower credit, and they're going to raise the price for people with higher credit. So it doesn't matter what color you are. If this is not fair. This is the way they're doing it. It's like, really? The argument was, well, when you pay taxes, you pay for welfare programs. Yeah, well, I also pay for national parks, and I pay for battleships, and I pay for the Army, and I pay for government services that are out there. So don't tell me that this is apples to apples. This is not like you're taking tax money to do it. You are raising the price on people with higher credit scores, and you are lowering the price people with lower credit scores. And you're doing it in a very unfair way. And that is why everything exploded. So I don't have any solution for you other than to say, you know what? You have to be the master of your own destiny in this world. And as entrepreneurs and people that are out there, that are working hard and are pushing and are, building up their credit the way they should be, suddenly, now when it's time to buy a house, the federal government's going to charge you more for something. Really? That just seems so discriminatory, unfair. By the way, if a company did that, you'd have the Department of Commerce saying, you are practicing price discrimination. That's wrong. You can't do that. And so, sort of interesting that the government's getting away with it, doing it this way. But you have to be the master of your own destiny. You have to put yourself in a position that you don't have to rely on a government program to give you a discount or be charged for something. This is not helping the middle class buy homes, because this part of the middle class with a better credit score has to pay more than this part of the middle class that doesn't have it. That's not to say that the government shouldn't try to help people along the way. And since, if we know anything about FHA and things, there's a lot of government programs tied to homeownership that make it happy. But I think this is just really a weekend news cycle that's not going to stop, that I don't think the Biden administration wanted. As a matter of fact, Obama's housing chief over the weekend made the rounds on a couple of the news shows, and he actually was slamming the fact that it happened. So, you know what? The problem is supply and interest rates. People, giving them a lower cost of mortgage insurance doesn't change the interest rate and doesn't magically make a bunch more houses appear.